Hi, John.
Hello.
Hi, John. Hi, Scott.
I have a party crasher.
Wow. Okay. So we're just waiting for Roberto.
Yep.
Okay. He's got a minute. So, John, you might be interested. Have you seen Denise's work on the homeless women?
Denise Saunders, yeah.
You have seen it?
Yep.
Okay.
Yeah, we got the sneak preview.
Oh, of course you did. Okay. She just reached out and wanted a bunch of lady electeds to go and see it.
Okay, yeah, we saw it.
Not that you're a lady elected. And Scott, you two are welcome to go, I'm sure.
And what is it exactly?
Take a lady with you. How's that? It's an exhibit. So Denise is a resident of Delray Oaks, and they have an exhibit about homeless women. It's at I think it's at MoMA.
Yeah.
It's where?
John,
At the museum down across from Holton Hall.
Oh, okay.
and you know that house up there was owned by the Work family.
No.
Right. Okay.
Yeah.
Anyway, get me going on.
Yeah.
I have noon.
Okay. Thank you.
Mhm.
Bear with me. I just have to find my agenda.
And John, you said Jeff is going to log on with his phone?
I think so, yeah.
Okay. I'll keep an eye out for him.
Okay. So it is, I showed 12:01. Let's get started. Welcome to the regular meeting of the City of Delray Oaks Finance Committee. Today is Friday, March 11th, and it is 12 o'clock. Karen, could you please do a roll call?
Councilmember Shirley,
Here.
Councilmember, I was going to say Gerton because that's what it said. Donaldson,
Here.
Mayor Kerr.
Here. I'm glad it must be a Friday
Sorry.
afternoon and everybody's a little casual. It's all good. Now it's time for public comment. General public comment must deal with matters subject to the jurisdiction of the city and the committee that are not on the agenda. Anyone wishing to address the Finance Committee on matters not appearing on the agenda may do so now. Any public comment? Seeing none, I'm going to bring it back and turn it over to City Manager Gerton for our first item, which is review mid-year budget adjustments.
Yeah, and actually I told Roberto that I would ask you this in advance of the meeting, and then I got busy and forgot. So if you don't mind, we'd like to change up the order and go over the audit first.
Sure.
Okay.
Or any issues from council persons?
Nope.
Okay.
Okay, so just to preface, we got the draft audit. This isn't the final audit, so you'll see there's still some references to 2021 in there and some other old language from the previous audit. We'll have the final audit by the time we present this to the council. But we have all of the key stuff in there that we need to review with you all. So we figured it was a good time as any to show it to you. Roberto and I have been working all morning to digest it because we just got it last night. Roberto has done a better job than I have, so I'm going to go ahead and turn it over to him because he will be much clearer and concise than I will be.
Okay, thank you, Mayor Kerr, members of the committee. First of all, I apologize for the tardiness of it. This should be the last year. Next year, everything will be back on track. Absent any other pandemics, hopefully we're done with that. We wanted to do the audit first because we should see where we ended up last year before we start talking about this year. It'll make a little bit more sense. And because this is something that doesn't come to you but once a year, other things you see on a monthly basis, I'd like to spend just a little bit more time getting you familiar with the audit report and a few key numbers in there. And then based on your feedback, we can certainly shorten the discussion for the council. But as a finance committee, I want to make sure that you have a full understanding of what this is about. So I'm going to walk you through, I'm going to share my screen. Let's see if I can do this. Yeah. Hopefully you can see my screen here. Do you see the audit report? Okay, perfect. So what I want to do is just basically though first go over what makes up this audit report. It's a lot of pages, but it's kind of like a tax return. A lot of it is just filler stuff that there's only a few numbers that really count. But I wanted to kind of go over with you how the audit is set up. The most important part is the auditor's opinion, and we're going to look at that in a minute. Then there's this section called management discussion and analysis, which is really what we're doing right now. We're going to be discussing the audit with you. But there is a section in there for people that look at the audit later on. It'll, they can read about it, what we're going to talk about here, but we get a lot more detail here than this report does. It's just the required part of it. Then we get into the actual financial statements. Just for your info, and by all means, because I deal with this all the time, let me know if I need a clearer explanation, because by all means, just stop me. So these government-wide financial statements, it's kind of new about the last 5 years. This is presented, the city's financial statements are presented as if it was a business on full accrual, but the city's not a business. So there's some numbers in here like, when you look at it, it's like, it doesn't quite make sense, but that's the way it's required. The Governmental Accounting Standards Board said so. The accounting requirements, every agency has to follow them. The auditor has to follow them. Where we're going to spend most of our time is on the fund financial statements. Those are the balance sheet, the statements that you see every single month. This is how the city prepares its budget. So that's where we're going to spend most of our time, along with some notes regarding these numbers that are key information for you to be aware of. The rest of this is just some required information that they provide, supplementary information. It all feeds back together. And then findings and responses, if they found anything during the audits. So that's what we're going to go through. So briefly, the first thing is the auditor's opinion. This is what you're paying. I forget what the sum is right now, but this is what you pay for this letter on their letterhead. Regarding these numbers, the key is this. So their opinion about these financial statements is that they present fairly in all material respects, the financial standing of the city, basically. And while that you may want to present fairly in all material respects, that's just the way it was developed. Basically, you can't get a better opinion than that. You can't get one that says you did great or anything. It's just that the numbers are accurate and they can be trusted. Sometimes they present qualified opinions when there's something wrong, but in this case, they're saying you can trust these numbers, and that's what you're paying for here. And then this management discussion and analysis, like I said, we're going to skip over it right now, but this is basically the discussion that we're having right now about the finances of the city. It just takes the numbers, and then of course a reminder, there's some numbers that are still missing. It kind of tries to present the audit in the layman's terms for other people to understand. The statement of net position is a big old document here. It'll make more sense at the end. So we're going to skip over it. We'll come back to it in a little bit. The statement of activities is basically on a full accrual, what the city's finances look like. And again, it'll make more sense after we go through a few things. This is where we want to focus, is the governmental funds balance sheet. The city has, everything is reported as a governmental fund. You are familiar with the general fund. What this statement here does, it takes what I call the major funds. The general fund, which is always a major fund, this South Boundary Road construction project of 7.2 million, all the other funds it's all based on mathematical calculation, excuse me, calculations as to what's major and what's not. All the other funds are considered non-major. They're summarized here. We'll look at another schedule that puts them all together. That's just the way it works. So for right now, we'll focus on the general fund balance sheet. So you'll see we got 1.9 million in cash at the end of the year. 360,000 is restricted. That's basically the section 115 monies. Some receivables, and this 8.9 million is added to the asset, but this is the value of the land, the forest land. That number was developed a long time ago. So whether that's the actual value, I guess we'll see when the property gets sold, but that's what's been on the books. And now, because that land is for resale, if you're gonna sell it, it is a value to the city. So total assets of 11 million. You have accounts payable, these liabilities totaling 369,000. So when you take the assets less the liabilities, you get the fund balance or net worth of 11.1 million. But the thing to keep in mind, 8.9 of that is the land. We can't use it to pay bills, so that's restricted. Land held for resale. The 351 is the actual money in the section 115 trust. We also can't use that to pay bills. It's set aside for pension. And what we do have is the money for economic uncertainties, and then some other money that still needs to be appropriated. So basically, we're talking these two is what the city has available to spend on June 30th, 2021. That's 1,920,736. That is what you have available, which coincidentally is about the amount of cash that you have on hand. So that's kind of free and clear to be used right now. It's only been set aside for economic uncertainties. For council, it's not assigned, but this is money that you have available. Beyond that is the South Boundary Road is basically restricted for streets and roads. And the rest of these other funds are also restricted for streets and roads, the habitat management, capital projects. So as you can see, the only money that you can do whatever you want with is the general fund money, this 1.9 million. The rest of it, you can only do what it's set aside for. So this is the balance sheet. One of the things to keep in mind, the balance sheet is supposed to represent what's called readily available resources, money that you can actually use to pay bills. That's the whole purpose of a balance sheet versus the statement of net possession shows everything about the city. This is money that's readily available. So this is the balance sheet. After this comes a reconciliation that takes it from the government balance sheet all the way to the government-wide statements. We'll skip that for right now. There's a lot of adjustments there. Then this is what you see on a monthly basis, the statement of revenues, expenditures, changes in fund, and changes in fund balance. You'll see property taxes, sales tax. These are the things you're used to seeing, the transaction tax. The other big numbers, charges for current services, which is primarily the police department contract. So the city general fund, about 3.9 million in revenue. And then that's used to pay for general government, which is basically everything outside of the police department, and public works, a little bit of community development and parks, some capital projects that were done last year, and some debt service payments, but mostly for police department equipment. So the total bills were 3,976,000. This is as close as we've ever come to just making it. Keep in mind, budget reductions were made for this fiscal year because this is when COVID really came in, and we reduced things, but they barely made it. It was, the reductions were good. So we did cover, well, all but $150 worth, but there was $50,000 that came in. This was the coronavirus relief fund, and that money was transferred over to the general fund to pay for the police department. So at the end of the day, 49,850 was the change of the surplus for the year. I've never seen the city come this close, actually way past, in times past, long time ago. It just be a huge deficit. It came in, it became a surplus this year. We basically broke even for 2021.
Roberto,
Yes.
May I ask a question?
Sure.
You said something about the CARES fund was put towards the police department?
The coronavirus relief fund, yes,
That was CARES.
yes.
And you said that money was put against the police department?
Well, it came in as 50,000 into its own fund to be tracking. And then it had to be used for police or certain other things. It was designated as being used for the police department. And the police department is almost $2 million budget, so it easily covers, that can be used towards that.
And so this is a question for later on, but I want to come back to this. So I don't believe we ever saw the true up for last year.
Okay, no, so you're talking about the police department budget?
Yeah,
Or-
the airport true up after
Oh, okay.
every year. And
Yeah.
for me, I just want to make sure that if we're putting in $50,000, that the airport is also putting in $50,000.
So if I may, with regards to that question, well, two things. The true up is the next report that will be coming up. Once we get this final one, they will then give us the true up for the airport. The 50,000 is the city's, what the city got. And so we applied it to the airport, but the airport, we're not getting any money from the airport for it. You know, they're using their money for whatever they're using it, but they get no benefit of it. We're not reducing their share by the 50,000.
Okay.
Their 50% is still their 50% of the police department budget. This kind of helps reduce the city's share.
Got it. Okay, thank you.
So, you know, that's the bottom line. The general fund basically broke even. And all the other funds combined actually also had a surplus of 33,000. So 2021 was basically a break-even year. Just everything kind of came together and broke even. This reconciles from this statement over to the government-wide, which is on a full accrual. We'll go over those in a little bit. Then there's this, all the financials, all the audits include the summary of significant accounting policies. It just tells you how the city's set up, how we do the accounting, how the financial statements are set up, all the different funds the city has. And then we get to the actual discussion on some of these numbers. Okay, so when it comes to cash, this is what the city has. 436,000 is what was in the checking account at the end of the year. That was in Union Bank, of which 9,000 was restricted for one of the developers. Still has 9,000 that's sitting there. Cash with the fiscal agent. This is the money sitting with Fidelity in escrow, two escrow accounts for South Boundary Road. And then 3 million is what's sitting in the local agency investment fund. So this is where the city's cash was, of the 12 million. The other, this is just again how the city can invest the money, all sorts of disclosures regarding those numbers. The other things to consider is the capital assets, what the city owns. The city owns land valued way back when at 549,000. Then we have buildings, furniture and equipment and structure, street improvements, 2.7 million. And you can tell the building is 691,418 is depreciated. The furniture and equipment, 791,376,000 depreciation. And we just started, this was the big project a couple of years ago where all this, well, not all the streets, but most of the streets were rehabbed to a certain degree. So all this tells us is that, you know, this depreciation as it continues, these things will have to be replaced, or not replaced, but at least improvements will have to be made to keep them going. So this is the city's assets. This is one of the ones that we'd like to focus more on is the long-term liabilities.
Roberto, before you go on, I'm sorry, there's a lot of numbers being thrown and I didn't have a chance to review the numbers.
Yep.
Because they came out this morning. So you indicated that there was $3 million in LAIF.
Yes.
And obviously we don't have $3 million in emergency funds. So can you tell me the extra probably 1.8 that's in there?
Yeah, so the other money is, we have about $500,000 is for the, actually, it's in the financial statements that you get every month. There's a statement there that shows the cash that's in late, but if I recall correctly, it is the money for the South Boundary
Got it.
engineering. The engineering portion is not in escrow. And also the Fora Habitat, the for the Flora Habitat, that's also not in escrow, that's just sitting in LAIF. Those are the two big numbers on top of the general fund cash that are sitting in LAIF.
That's perfect. Thank you.
No, any other questions, by all means, please let me know, because, like I said, you just got this, so. So long-term liabilities, because these don't appear on the balance sheet. This is the debt the city has. A lot of other agencies would love to have this debt. For the city, it's a lot, but for other cities, the city's in pretty good shape here. So the debt is leases. This is for the police department. The city bought the couple of cameras and their reporting system. It'll be paid off in 3 or 5 years. So there's annual payments of $7,800 a year. That's $40,000 owed on that. The Federal Group International LLC, $1.2 million. No payments have been made. That's sitting there, but there is compound interest on part of that loan. So the interest is going up at the rate of $47,000 a year. It's a fixed rate, 5%, except that it is compounded. So it's not going to be 47 every year. So I think the 5%, whatever's in this interest gets added to the principal, and you're paying interest. It's compounded interest. So basically 1.2 million in principal, and then the compound interest is up to 289,000 as of June 30th, 2021. That's the city's biggest debt. You may recall we used to have for pollution liability debt, and that was paid off a year or two ago, a little over 500,000. The only other one is the TAMC Measure X loan, which the city got to do those major improvements. That's going down about 60,000 a year. And again, this is scheduled to be paid off in about 10 years. TAMC is not giving the city the Measure X money anymore. It just keeps it and applies it to principal and interest. So this will be paid off, probably in about 8 years left now. And this one will be done in about 3 or 5 years. It's just part of the budget each and every year. So then the only other big item is this 1.2 million in long-term debt. And there's more information as you read this on the leases and also on the LLC note. Just a reminder, it's 700,000. Well, of the 1.2 million, 700,000 was actual loan proceeds that the city got, and those are accruing 5% interest. So that compound interest is on the 700,000. The other 500,000 is just a settlement amount, and that has no interest on it. The other thing is there is no payment required until the commencement of construction on the Port Ord property. And then the payment to them, you're required to pay them at least 50% of the revenue associated with the development of that property. So that's why what you see here, there's nothing due within 1 year, because we don't have, once we start making payments, then there will be amounts due. It's right now, it's just sitting there, it's going up. And then there's an explanation about the TAMC Measure X loan and how they calculate the interest. Those are the biggest, that's the only debt the city has, other than a debt which is not technically considered a debt, is the CalPERS retirement system. Right now, the city's pension plan, this is all about it. There's lots of information about the pension plan.
Hey, Roberto, before we go to that, back on the other debt, can you, I just want to clarify, the interest is compounded, right?
Yes.
Yeah, and it's right for this year was what, about 47,000 for last year?
47,015.
Okay, yeah, I just want everyone to be aware of how quickly it's building up by not paying it off.
So this 289 is started in 2014. So since June 1, 2014 is since it's been earning interest. So we got 289,000 in compound interest since that date.
Yeah.
And we'll continue. Let's see. So then the other, well, I mean, right here, the other major number is this. 1.6 million is the net pension liability for, this is how much the city owes to CalPERS as of June 30th, 2021. to put that in perspective though, it is, let me see, where is another, oops. There's another note in here that tells us that this is, well, basically the note I'm looking for in here says that it is 70, I think you're about 75% funded. The pension plan is about 75. Oh, actually it's later on. It's another required statement. But the city owes 1.6 million. And just as a reminder, when Dino was here, the thought was, let's see if we can, well, back then it was 1.5 million. See if we can pay this off in say 10 years, or not pay it off, but start putting money aside to be able to pay it. So that's where the city started putting 150,000 a year over 10 years. And so far got as far as 300,000, but there's money set aside to help pay for that. That's the Section 115 trust. The, let's see, the rest of these are just numbers required for all this. Oh, okay, so this is what I was looking for. So the city's pension, it was 79% funded as of 2015, and then every year you can see 76, 75, 75, 75. Basically, it's been at about 75% funded for the last 5 years. And it changes because it's not just how much money the city puts in, but it's all actuarial value calculations. If people are living longer, oh, okay, the value of those benefits goes up and we got to fund it. But I mean, that's not bad. 75% funding is, we're trying to get it to 100% funding by putting, and this is money that's in PERS. PERS is holding that much money for the debt. The city's trying to build up the other 25% on the side and then decide what to do with it. So that is those numbers there. Then OPEB, I don't want to spend too much time on OPEB because this one can really get confusing. It is for me at times. This is another liability that the city has. So back in 2018, when this thing started, it was 262, 261, 340, 497, because the city has taken on more police officers in the police force. The OPEB is just other pension and post-retirement pension benefits. So basically retiree health. The city, because it gets its health insurance through CalPERS, is required to contribute a little bit towards each retiree. That little bit is like $140 a year. Yeah, $140 out of their premium is paid by the city. And basically that goes on until they're no longer getting health benefits. And there's a mathematical calculation that actuaries do to see how much would all of that actually cost the city. And so they calculate it all out. And this is, in theory, how much the city would owe. Most everybody, well, not most everybody, myself and a few other people. So that's really way overstated because the city has retirees, but there's only 2 retirees getting benefits. Health insurance is very expensive through the CalPERS retirement system, so most people do not opt for it. But the way this is set up, there's percentage, it's not based on just the 2 that the agency has retiring. There's some mathematical calculations that basically overstate how much the city would owe. But this is if we were to close doors and have to pay out everybody's future health benefits, it would be $497,000. Like I said, to me, it's an overstatement, but I didn't decide the calculations and how this is all done. It is a number, though, that technically becomes the city's responsibilities, and you'll see it when we get to the government-wide statements. But the city's not paying anything other than the city's on a pay-as-you-go basis. So every month when the city pays the health premiums for everybody, it pays about $140 for those 2 retirees. And that's the way we're funding it right now. That's why it's being funded. These are all the other non-major governmental funds that we talked about. So the other monies that the city has, gas tax, at June 30, 2021, had a $47,000 fund balance. The SB1 monies had $103,000 sitting there as available. Then these 2 and Measure X, there's actually some money left over from the original project. So these 3 are monies that can be used, but only for streets and road purposes. So they're kind of restricted to that. The Florida Habitat Management Fund has $775,000, and that's restricted for a habitat. The other one is the South Boundary Road Engineering has 505,000, but that can only be used for that. And then the General Jim Moore intersection with South Boundary Road has 1 million, again, can only be used for that project. And those make up all of the total non-major governmental funds. And that's all of the money, all the funds the city has. The biggest chunk right now is for South Boundary Road. That's where the money's sitting for a lot of work to be done there. And then some money for streets and roads through the other 3 funds. That was a balance sheet. This is a statement of revenues and expenses for each of those funds. To me, the only thing really to take note of here is that gas tax, the way we've been budgeting right now, went up 12,000. It continues to go up about 12,000 a year, building up to the point where right now there's 47,000. And SB1 money has been building up. There hasn't been a use for it, trying to get it to a project. Now we're up to 103,000 in SB1 monies that could be used for a street project. You see, there were no expenditures, just the money coming in. Measure X, TAMC gives the city the allocation. The city never gets it. They use it to pay principal and interest. But so you really can't touch this, at least that part. There is money sitting there, 95,000 from when the original loan was made that could be used for streets and roads. And then the other ones didn't have anything. For a Habitat, had $650 in expenses, and engineering had $12,000 in expenses last year. No construction yet on the intersection. Any questions on those specific ones?
So I do. You just said that we have between 90 and 100K in gas or SB1 gas tax funds that can be used currently for streets and roads.
Yeah, these 3, the 95, the 73, and the 35.
And
only
so
use-
that doesn't go against our repaving that was done. I mean, I saw the figures that the rest of the money is going towards what was done 3 years ago.
Uh-huh.
But this is a different pot.
Yeah,
That's great.
Except Roberto, we used what, 35,000 this year?
35?
This is 100,000 for last year. We're talking about last year.
Right.
And we used what, 35,000 this year already on the work Portola
Right.
stairs.
Yep.
And I think we have, correct me if I'm wrong, it's like 25, 26,000 allocated to curb repair.
Yep.
For this fiscal year.
Yep.
Am I right on that, Roberto?
you're right.
Okay, so we still have approximately 30K.
Yeah, no, there's still some money left. But
And-
some of it is spoken for.
And does that pot get refilled every year?
These 2 do, the gas tax and the SB1.
Yeah, those are annual taxes.
Got it. And do we get that amount of money every year-ish?
Yes, about 44,000 in gas tax and about close to 30,000 in SB1 monies.
So we can conservatively guesstimate 75K.
Yeah, of
A year.
right now, of which the gas tax, basically that's being used, 31,000 is for public works, street sweeping and street lighting.
Okay,
That's what that's going for right now.
So caveat.
Yeah.
The governor is playing around with the idea of forgiving taxes, gas taxes for a while relative to
Yeah.
the situation in Ukraine. So.
Yeah.
We'll have to keep that in the back of our minds.
right. Thank you. Thank you both. Ms. Shirley or Donaldson, any questions?
No
you
questions
know-
for me.
I have a quick question. So, I mean, we still owe TAMC for that Measure X funds. How come we have a separate pot, that 95,000 of Measure X funds? How come we're not, how is that, why is that separate? Why doesn't that just go to our debt,
I guess
to them?
it could go to the debt. It's just from when the construction was all done, at the end of the day, we ended up with 95,000. And it wasn't, because the project was financed by TAMC money and gas tax money and general fund money. It wasn't financed just with TAMC,
Oh, I see.
860,000, but there were other sources of use. And we ended up, I guess, using up some of the other ones instead of the money that they gave us. So it's strictly, it's not that we used up more than what they actually provided, but we used up other money that we had in other sources too, and as such, we ended up with 90-some thousand left when the project was said and done from all the three sources. But because it was all financed out of this one fund, it's considered
Okay.
Measure X money. I was also, if I may, there was one other thing, particular thing that happened is when TAMC Measure X was set up, TAMC gave us some money that they weren't supposed to. They were supposed to be keeping it all. They ended up like a quarter's worth of their payments ended up coming, and then like, oh, wait a minute, we're not supposed to give you the money because we're supposed to use it towards the loan, but it was already ours, the city. So a combination of those things.
Are we paying interest on the money that we still owe back to Measure X?
Yes.
Or is it just, we are paying interest on that? Okay.
And so the interest was 18,000 this last year. So out of 77,000, 18 went to interest and 59 went to principal. The interest fluctuates, and the interest is what they get on their money that sits at the county pool, which is about 2.5% or so. There is interest charges on that loan.
Okay.
How much is remaining on that loan?
It is, let me see. So it's still in the 700,000 range, 705,000.
Yeah.
And we have another 7 years to pay on that, right?
Yeah.
Yeah, we pay 76,000 a year.
Okay.
Is what we pay.
So then the last thing I wanted to mention that we're kind of proud of, but it's not a big deal to most anybody else, is the fact that there are no findings. You know, they didn't see anything wrong with the system. It's just a minor at the very end, but they didn't find anything wrong with what the city is doing, which is a long ways from when I came on board in 2014. This page used to be a couple of pages long because there was lots of issues, but we've been able to clean it up since then.
Thank you, Roberto. Yes, we've come a long way.
Yeah, and actually have a surplus that, you know, money the city didn't used to have. So, I mean, that's a brief overview. I don't know if there's certain things in particular you would like more information on, or us to highlight, or for the council, the rest of the council.
For me, I'm sorry, please go ahead.
I was going to say, can you please ask them to fix the spelling errors?
Oh, yeah.
That,
Would-
okay.
Was there some in particular that you noticed? I want to make sure that we catch those.
They need to spell Ray correctly. It's with an E, not an A. It's only on some of the sheets.
And highway signs.
Yeah, right. And Safeway signs.
Oh,
Okay. All right, no, well, tell them to run it to the spell checker.
my question was, so we have 268.554 remaining. What did we do with that? And John, what do we do with that?
Yeah, so that's part of the next discussion.
Got it.
Yeah.
That's all I have. I just want to say thank you, Roberto, and I'm really looking forward to having this earlier in the year next year.
No, so are we. I'm getting this thing at the last minute.
Yeah.
It's kind of stressful.
Commissioner?
I just have a couple questions, but it's just for my education purposes. So the money that we have in escrow for the South Boundary Road, how come we can't put that in an account that earns interest?
That's the way the agreement was set up with Delray Oaks. They actually, it works the other way. The escrow agent charges a fee for keeping the escrow open every year.
I see. Okay. All right. And then the land that we own and the value that's associated with that, you kept referencing that those values were assigned to them years ago. Is there any time where those are reassessed and a more recent value is put into the audit report?
I think up to John, the city would have to have an appraisal done. This was done a long time ago. So I don't know. You'd want to pay for that.
Yeah, I don't know that there's any benefit for paying for that,
Okay,
especially as we get closer potentially to getting a developer online to address some of those properties. So at that time, they'll get an assessment.
okay.
But
I
they,
was just curious.
they also have access to public documents. So they could see that we have evaluated or, evaluated it at 8 million.
Right.
Right. Okay. I was wondering if, so the CalPERS fund, you said we're funding that at around 75%. Is there we don't have a policy, or is there a recommendation for what percentage you should have that funded at? Like, I'm just wondering, where are we hitting on average? Are we good? Or are we needing improvement?
No, we're good or above the medium. I think we're
Okay,
above. I mean, one of the things that helps the city to keep in mind is the city's retirement system is at 60%. I mean, at 60 years, a lot of agencies made improvements to their system. Typically it's 2% at 60. They improved it to 3% up to 55 or 50, so people could retire early. That's when when CalPERS was flush with, well, they weren't really flush. The stock market was way up high, so they thought they had lots of money. The stock market crashed, and then everybody ended up owing all this money still. There is no set policy. We can look for something that's some guidance. At this point, the city's policy was that we were trying to fund that 1.5 million that's still outstanding over the next 10 years, putting money aside, other than, because what PERS asks for is the minimum required contribution. And as you know, when you pay the minimum on a credit card, it's gonna take forever to get it paid.
right.
But they are increasing that minimum. They're doing some things so that we can fund it sooner. But at least personally, I think you're in good shape. I don't know, John.
Yeah, Delray Oaks is in better position relative to that than any other organization I've worked for.
Perfect. That's all I need to know. I just needed a relative understanding. Okay, good. All right. Yeah, thank you. That was great.
Okay, so then let me just share with you the last thing.
Just a second, Scott,
ahead.
anything?
No, I'm good, thanks.
Okay, so the last page I told you was actually at the beginning, but it wouldn't have made much sense. Now, you saw the balance sheet, which has all the available resources, and then we went through the notes and we found the assets and the liabilities. And so this, let's see, which screen am I sharing? Are you seeing the statement of net position or not?
Yes.
Yes.
Okay, good. So then this takes all of those things together, all of the cash, the taxes, the land held for resale, everything that you saw on the balance sheet. And it adds the capital assets, the value of the property. Because if you own the business, that's part of the value. So total net assets of 23.7 million. Then separately, there's deferred outflows of resources. I'm not even gonna try to explain it other than to say this is like basically prepaid. It's an accounting terminology, money that the agency put into things that's prepaid and isn't gonna be shown until in the future, but it's an asset. It's the way they count it in accounting terminology. Then we have the liabilities. This is what you saw that we owed in the general fund, about 377, but then we add all the long-term debt. 102,000 is the value of accrued vacation leave that at some point will be paid out as of June 30, 2021. We have the net pension of 1.6 million that's owed. This OPEB liability of 497,000. So total liabilities are 4.8 million for the city. And then this deferred inflow of resources kind of coincides with this. I'm not going to bother trying to explain it. It's just, it doesn't make sense, but it's an accounting terminology. So the net position then is some of the same things that we had talked about. Now in this case, we take all the land, less anything that's owed on it. It's 1.5 million. The land held for resale, all these things are restricted for pensions, streets, shows. At the end, we end up with a unrestricted net position of 1.6 million, which is where people have a hard time like, what? We're actually upside down. Technically, according to this, you would be. If the city closed its doors and had to pay everything off, we would be short 1.6 million. But like I said, the thing is, the city is not a business. these liabilities that you have here, we know are gonna be paid in the future. The pension liability, you're not gonna pay it next year. All of these things are to be paid into the future. The city lives on in perpetuity. So taking a snapshot, I mean, it gives you an idea, okay, where would we be right now? You know, we would be short 1.6 million if everything had to be sold and paid off, but that's not gonna happen. And so the number can be a little misleading because like I said, it's already planned that the long-term debt's gonna be paid at least when you sell the property. The net pension liability will be paid in the future. There's no requirement that all these things be paid off right now. So but it is a statement that's part of the financial statements. I don't know if you have questions on this one. Like I said, I'd like to say that for the end because it can generate a lot of question marks.
Roberto, you did a great job going through everything. Just want to let you know.
There's a lot of stuff in here. I think I'll spend some time with it before the council meeting, and I'll let John know if I have any questions.
Okay,
So let's move on to, is it time? Or John, did you have something to add?
No, I think we're
Okay.
good.
Let's move on to the mid-year budget adjustments.
okay. So you have a staff, this one you had a little more time to digest ahead of time. And so I'll review it briefly and then we can go into the details as much as you want. Okay, where did it, oh, actually, let me see how this works. I've got what am I, I'm trying to share that. Let me make sure I'm sharing the right screen where, okay, where am I? Oh, here we are. Okay, so this is the staff report, right? That's what you're looking at, hopefully? Yep, okay, so as I mentioned here in the background, you know, this is being done based on expenditures through February 28, 2022. Typically, we would have done this on expenditures as of December 31. But because we're late in getting the audit and getting a few of these things done, it's based on these numbers. We're still calling it mid-year because we're still looking at things at mid-year, but we're past the mid-year portion. So what we have here, this is a general fund. This is a budget as it stands right now. We're supposed to have a surplus of 272. After going through it several times, John and I back and forth and doing some more research, we think the general fund, the revenue should go up by about 407,000. That's where, I mean, that's still conservative. We're pretty sure we will hit this increase, but we also have appropriations that need to increase about 328,000. So that's still, this will give us a surplus. So we're going from an operating surplus of 272 as budgeted to right now a revised surplus of 351,000 at June 30th, 2022, if all these numbers work out. Okay, so that's the big picture. It's looking good. This year is gonna, I guess you might call it, people are calling it, it's a rebound year. It's not gonna keep rebounding, but this year it's a rebound. We're coming back. So the revenues of 407,000, these numbers are a little bit hard to read, but these are the revenues that make up that increase. And there's a little explanation down here below that, but as you look at the numbers, the biggest increases are in the sales tax and the sales tax add-on, the transaction tax. These are based on projections of how much we've actually received. And we've confirmed those with HCL, your sales tax consultant. Because right now we're at 94% of budget. So we definitely expect to receive 490,000. That's an increase from 395. And the sales tax out should go at least to 900,000. So what they're telling us, I mean, the pent-up demand is there. We're also collecting. Remember, during the pandemic, there was businesses were allowed to defer their sales tax. Now they have to pay it back. So that sales tax back is coming along with the increased sales as a result of pent-up demand. However, that's being offset by a decrease of 100,000 in cannabis tax. We're just not going to collect this 300,000 that we had budgeted. We should definitely collect the 200,000, but I mean, that's where we're at, and John can talk more to that in a minute.
Roberto, do
Yeah.
we have a list of the taxes that are owed us that were,
Yes.
we do have that. Okay.
Yep.
Thank you.
And, but we're not budgeting for it because at this point, they're owed. The increase, the other large increase is the 61,000 in the COP monies. This is money funding from the state for the police officers. The city's guaranteed 100,000 in law, so that's why we always budget 100,000. But now there's been some surpluses built into the law. As those surpluses are developed, once a year the city gets a payment. Last year it was like 56,000. This year that payment was 61,000. So this is money in the bank. This is definitely going to be there. So we're saying we need to increase to 161,000. This is for that supplemental funding. That's there. The other two major ones are the AMBAG REAP and the HCD LEAP grants for the housing element. You may recall last year, the city got these two grants for 130,000, and there was a $130,000 contract to develop that housing element. June 30th, the work was not done. There's still a lot to be done. So now this is a remainder of that grant that we're saying 57,000 is remaining on the REAP grant, and the 65,000 hasn't been collected at all from the LEAP grant. So that's money coming in, but there's also an offset on the expenditure side because we're also appropriating this money for the contract with Denise Duffy and Associates for this, because that was not included in the original budget. This is all what we would call it a carryover from last year. The contract was there, the money was there, it wasn't all finished. We need to finish it, and we bring in over the contract and the funding to pay for that contract. I can go more into that, but that's primarily what this is for. The other nice thing that's standing out is the police services budget. We're increasing it from 5,000 to 48. This again is basically money in the bank. It's already been collected. The events are returning at Laguna Seca, at the airport. Well, every place that the police department provides services, we have provided them. They've been billed and they paid. So there's also an increase though on the expenditure side because now the police officers are out there more providing these services. But there's it's nice to see that the events are coming back. That's 43,000. So most of this stuff should be ongoing. The sales tax is a bit of a rebound. We don't expect it to keep going at this increase. The last one here is a one-time. That's the restitution. We were budgeting it annually. The full amount is about 70,000. It was paid off. So this is a one-time money. There'll be no more restitution monies coming next fiscal year, but it is here in the general fund. Now, these are the items along with minor increases in some other accounts that make up this 407,000 is a large increase for the city of Delray Oaks, but like I said, here's an explanation as to why these are coming in on the revenue side. Before I get into the expenditure side, any questions on the revenue side here?
I have a question. I'm not sure if maybe John is the one to answer this, but for the police services, what we charge when they do a special event, do we make money from that, or is it like just to pay? Do we break even when we do an event?
That's a good question. I don't know the answer to that yet. Do you know, Roberto?
Jeff's on the line.
Or Jeff? Yeah, Jeff's on. Can you hear us, Jeff?
It would be good while Jeff gets on the line to, we could analyze that if you want. The police department is billed at $125 an hour. And there's contracts with each of these agencies before the event takes place. Now, I don't know if those numbers are.
Yeah, so I haven't looked at our agreements. We've really only had a couple new events. So I haven't really looked at the agreements yet. Generally speaking, we wouldn't make money, but we would charge
Okay.
We charge time and a half because that's what the officers are working. So we're covering our full cost for that. And it's the fully burdened rate, meaning we add in costs for, benefits and everything.
Mm-hmm.
But then normally we would charge, like a 10% administrative fee also to cover Karen's
Okay.
time or Lee's time or my time for
Right.
actually administering all of that.
Okay.
But I'll
Okay.
look at
That's
the
good.
agreement to make sure that we're covering all of that.
Okay, good. Thank you.
I had a question on that same line item. How predictable are those events for us?
Generally speaking, most of them are annual or semi-annual. You know, what's predictable these days? I don't know. You know, we went through 2 years of almost no events. And then that's thrown off some schedules. So like this fiscal year, we're going to have 2 Sea Otter Classics.
So is this all WeatherTech?
No, well, there's events out at the airport. There's the Sea Otter Classic. There's, but yeah, mostly it's Laguna Seca related.
Thank you.
Yeah. But also, you know, the air show, we have to provide security for any of the planes that utilize Monterey Airport, and they have a car event out there for Car Week and things like that.
And are these, you know, I'm always thinking about the airport contract. Are these added into, or they're just taken out of our half, right?
Yeah.
Okay. Let me think. That was all I had. Scott, anything?
No, I'm good, thanks.
Okay.
Okay, so we have 407,000 in additional revenue, but we're also requesting appropriations of 328,000. Broken out here by department, you know, city council, city clerk, city manager, auditor, treasurer, legal is doing good. It's holding its own, no increase in legal. Planning and building, which is mostly for the grant housing element, along with a few other things. And then the police department is taking the biggest share. A little bit for fire, public works, and parks is actually a decrease of $2,000. And here we just have a brief explanation. So the biggest increase is the police department, of which 144,000 is for compensation. There was a position that was frozen at the beginning of the year. It was unfrozen. We brought that person on along with the overtime and reserve officers pay. You'll see if you look at the line items, those are increased to make up for the fact that we had 2 officers out on administrative leave. The work still had to get done. So, you know, as much as the chief has tried to reduce overtime and reserve officer pay, we needed that to keep providing the services. Also, COVID affected the department. And then, of course, as we just mentioned, the special events, which are typically done on overtime, is what these costs are for. That's the increase of the police department. The fire department is 13.7, and that's just when we budgeted. We did not pick up the increase in the contract. It's already built into the contract. It's a multi-year agreement. We'll be sure to pick it up this year. That's based on the agreement. That's what the increase is for. And so then the planning department. So there's 64,600 is the remainder of that housing element contract. It was 130,000. There's still 64,000 left on that. So some of that is here. 30,000 is for the economic development services contract. We didn't, I guess when the contract was awarded, there was no appropriation made for that contract. It was just coming out of planning services, but we need 30,000 for that. And then there's been increased building and plan checking services. Now that the economy is opening up, there's been more expenses there due to, and because that's due to the increase in building permits and plan checks, since the inspector gets a percentage of those. As those fees go up, then his fee goes up.
So Roberto, one of the points that Roberto brings up about like the economic development services contract. Normally, if you have new projects like that after you've adopted the budget, and they're going to require additional revenue, if you're going to get additional revenues like a grant project or additional costs that weren't included in the budget, then part of the action of approving the contract at that time should be asking the council to also modify the budget commensurate with the action being taken. So going forward, we won't be doing those types of things mid-year because they will be done on an ongoing basis.
The other increase that's built into all of the numbers is there was an increase of about 32,500 throughout all the departments for workers' compensation and liability insurance from Embasia. They provide estimates like in January. We already have an estimate for next year, but that's not done. They continue revising that. And so we budgeted based on the original estimate. By the time the final numbers came in June, July, the budget was done. The premiums came in higher, so we need another 32,500 to cover the increases in workers' comp and liability. So these are the major increases in the departmental budgets. The police primarily for overtime, a couple other items there, planning, the fire department we explained, and then some of these others are primarily because of the workers' comp increases to the budget. The other major appropriation is the South Boundary Road. We have a fund there, and because right now it has no monies were appropriate at the start of the budget year because nothing was planned at that point. But since we do have a contract with Whitson Engineering for $505,000, we should appropriate the money because technically FORA gave the city the contract and the money to pay for it. So we have the money, we should show the contract too, because that's where the money's going. It's not free and clear to spend on anything else. It is for the Whitson Engineering contract. So nothing else is being spent. It's just to account for that contract that is sitting there. So there is no extra in South Boundary Engineering. There's the money, and there's a contract that will spend all that money if things work out as planned. So then that brings us to the fact that the fund balance is going to go up to 351, 339. So we're saying if that surplus materializes as planned, then it would probably be 150,000. We would recommend to go to the 115 trust because that was a plan some time ago. It can change, and that help fund the CalPERS pension obligation, and then the balance. I think we have enough in the economic uncertainties contingency. Maybe start putting some of this to start paying down that long-term debt that keeps coming up. It won't go away just yet. And then there is also an attachment that has all the details to all the numbers, which we can go over, or we can just mention, if you have questions about specific ones or about the staff report in general. Any questions, comments, or the like?
Kim, Scott, any questions?
No, I don't have any questions, but just, for the clarification, when we're looking at that 351,000+, that is the 268 from the unappropriated rainy day that we had, and then you add to that the increase of the 68,000.
Okay, if I may note, the amount that you're talking about at the very beginning was in the audit of June 30th, 2021. Okay, so right now we're talking about this surplus is for this year alone. Forget how much money we had at June 30th, 2021. This year alone, we're expecting a surplus of 351,000 for the year. This would then, if this works out, this would be added to the 1.9 million at June 30th, 2021. Then this is a surplus for this year.
What happened to the surplus from last year?
It's there. We can talk about it, what to do with it.
So is it on top of this?
Yes.
So there's an additional 250 something.
Yes. So if I may, so the way it used to work, and it can certainly be any which way you want. As I mentioned here, the surplus. So for this year, 21, 22, we're anticipating there will be a surplus of about 350,000. So then at June 30, 2022, the year is done. the audit is done. And if it turns out that there's 350,000 surplus, then we would come back to the board, just like we presented the budget. I mean, the audit. Okay, hey, the audit is done. We had a surplus of 351. We had planned on these items. Now we can actually do it because the money is real. Right now, this is just a budget figure. At the end of the audit, we know how much is really left. And so what we're saying, when the audit for June 30, 2022 is presented, if it has a $350,000 surplus, we would ask the council, hey, can we put 150,000 into the 115 trust and 201,000 into the set it aside for long-term debt? I mean, the council could decide right now, because this money is not actually going anywhere, it's just here. But it's what we're recommending is at the end of the year, once you know how much is left, let's see what we do with it. The audit for 2021, for the year, it shows, you know, we barely broke even. There was no surplus, but there is money there that needs to be accounted for from the previous years that we need to decide how do you want to spend that?
So Roberto, and Scott, excuse me, the end of June 2021, the audit shows that we have 268,554 excess.
Yes, well, unappropriated in the balance sheet. Let me,
Do we have that cash? Do we have that to be able to allocate?
yes,
Okay, and so then this year, what we're talking about now is a proposed 351,339 excess. And this is the suggested use of those. So in essence, we're talking about 351 and 268, so 700K. Is that correct?
yes.
Okay. Scott, I'm sorry, was that what you were saying?
Yeah, I just, I'm tracking on it. The 268 is the unappropriated piece, and I've got that, and this portion here would be added to that. And yeah, I completely understand, and I see the recommendations that this staff is proposing. So I'm good with it.
Any other questions, comments? Scott,
No, I'm
Okay.
good, thanks.
Kim?
So the money that's unappropriated from last year, do we have a plan for that, John?
Yeah, I'll incorporate that into the plan for next year's budget. The way the budget's been done here over the last couple of years is a little foreign to me. I'm used to
Okay.
doing balanced budgets where everything nets out at the end, and I'm not accustomed to budgeting unappropriated surpluses. I'm used to telling the taxpayers how we're going to use all of their tax money in the given year that we're going to earn it, and then making
Okay.
adjustments as we go along.
Okay, so that just rolls into next year's budget and we'll use it then.
Yeah, well, normally,
Is that what you're saying?
Roberto, correct me if I'm wrong, but when I first got here, I think the discussion was that any anticipated surplus from last fiscal year would have been used this fiscal year, 150,000 of it to fund the PERS, and then we weren't sure if we were going to have that
Yes,
balance, and so we were waiting for the audit to find out what it was. The audit came a little later than usual.
Hmm.
So rather than handling it in the mid-year this year, I think we'd just wrap it into next year's budget.
So then next year we end up by paying 300,000 towards that. We would double up next year.
Potentially, yeah.
Okay,
Depending on how we finish this year. If we finish this year strong,
Right.
we think we're going to, then yeah.
okay. Yeah, and I think, integrating into next year's budget, again, a plan to start paying off that long-term debt would be great.
Yeah, and I think this was to generate that discussion of how we want to do that. But I think, we're getting to a point where we need to have a plan, and there's, I mean, you all know it, that long-term debt is a little strange about how it came about and what the stipulations are and who we're even working with on that debt. And so staff, Roberto and I have some work ahead of us to pull all that information together and make sure we know what we're talking about as we develop that plan.
Okay. All right. Thank you.
Yeah, I mean, John and I spoke a little earlier. I would like to understand the nuances of that agreement more. And ensure that we don't start paying something off. I thought there was a time structure or something. I just want to make sure that John and Alex have all the information to make, the wisest suggestions going forward. Because Dino didn't want to start playing with the 500K until we had enough to dig into the 700 additional for particular reasons. And I just want to make sure that we understand what those are.
Yeah, well, we have to pay off the 500K first.
Right.
And then we start paying off the 700K, and then we have 10 years. When we start doing this, that triggers
Got it.
the initial 5-year period. And then there's a secondary 5-year period after that. So we have 10 years.
We also had discussion about going to them and asking if they would lower the interest rate.
Yeah, and Roberto and I talked about that.
Okay.
And even trying to identify who they are and do they
Oh,
still
wouldn't that be
exist?
great, right? Do we still owe anybody anything?
Right.
Somebody's grandchild or something?
Yeah, and if we find ourselves in a situation, which we may with some of the new funding that we have, new one-time funding that we have at our disposal, it may be that we want to go and offer them to pay off the principal all at one time, and maybe they even write off the interest.
Yeah.
In order to just get paid clear.
And get it done.
Yeah. So.
Thank you. I still remain a bit confused about what happens to the funding from last year. I'm hearing that you want to roll over this into next year, but what are we going to do with the 268 from the end of 21?
So that's what I'm talking about, rolling into next year's planned budget.
Got
Because
it.
what Roberto's presenting to you here, this
Yes.
is just our best guess. So we
Right,
don't
that's
know.
that's for this year.
Yeah, so the 300 and what is it, 51,000?
Yeah.
Is our best guess of where we're going to finish this year. So it's not real money yet until we finish the year. So I don't necessarily want to plan for all of that in next year's budget, because there's no guarantee we're going to finish this year with that 351. So what he went over for the audit, we know that that's how much was left over from last fiscal year. So that can now be added in as one-time money that we can use for something in next year's budget.
And so there is 268 for 21. There's an estimated 350 for 22. The 268 is real. And what I'm hearing you say is we're going to use that for next year?
Yes,
Okay. Okay,
the 268 will be incorporated in next year's budget.
why wouldn't we just do that now? Put
Because
the 150K into the 115 and then figure out what we do with the remaining 118.
we could.
Can you explain why we would push it to next year? I'm sorry, there's a disconnect here and I'm trying to figure out what it is.
Because I just got those numbers this morning, and so
Got
I
it.
have a plan for it. That's all.
Okay.
Yeah.
Thank you.
Yeah.
If it's that simple, I get it.
Yeah,
But
it's just I haven't had a chance to think about it.
Okay.
And
and with the audit so late, right, there is an advantage because I'm guessing we're going to talk about next year's budget in the next month or two.
Yeah.
Okay.
And-
Thank you for
And
that.
Mayor, I think the bigger point is whatever that chunk of money is, I think it's important that we as the finance committee start that conversation on what we would like to do with that chunk of money to kind of give some intent to the city manager and to Roberto as we move forward.
Of course. But I need to understand the mechanics. before I can understand, what to do with it. I mean, I think we all agree on, we need to get rid of our debt. But there are other things that happen in the city that, we could slice off $50,000 here and there for. So,
Yeah, so one of the other things, as we're going forward, we're going to talk about, especially in the budget development, is establishing some additional budget policies and fiscal policies. And one of those that's helpful is for fund balance. So if you have a balance from the previous year, already setting priorities in the policies on what that money should be considered to be used for. So normally it's things like long-term debt, including your OPEB and things like, and PERS liabilities, capital improvement projects, and various things like that. And then usually the last one is then if there's any money left over, then what new projects do we want to put it to?
right. Perfect. So any other questions, comments? Great. Well, Roberto, again, thank you so much. I'm looking forward to seeing what nuances you and John come up with between now and the council meeting, but it looks good. I'm proud of what we've been able to do these last few years during a crazy pandemic.
Yep.
So yeah, we've all weathered it surprisingly well.
Yeah.
Nope.
All right, everyone. Well, on that, we are adjourned.
All right.
Okay.
All right.